Accounts of non-trading concern. First, we are going to see about the meaning of non-trading concern. These are the concerns whose main aim is not to earn profit but to provide service to the society. These are some of the examples of non-trading concern: orphanages, charities, libraries, civil hospitals, sports clubs. Next, we are going to see the objective of non-trading concern. The main objective of non-trading concern is to provide service to its members and the society. Next, we are going to see the source of income for the non-trading concern. The main source of income for the non-trading concern is from subscriptions, fees, and government and municipal grants. Another important thing they need to concentrate is they should receive all this fund through a proper banking channel in order to provide an audit trail. Next, we are going to see the characteristics of non-trading concern. As we know, it is a non-profit making organizations, non-profit seeking thing. They provide service to their members. The source of income is subscriptions and donations. Next, we are going to see the difference between trading concern and non-trading concern. The main purpose of trading concern is to earn profit, but the main purpose of non-trading concern is to provide services. The second main difference is the source of income for the trading concern is through the sale of goods and services. But here in the non-trading concern, the source of income is only through subscriptions and donations. Next, we are going to see about the accounting for non-trading concern. In non-trading concern, they follow three types of accounts. One is receipts and payment account. Next is income and expenditure account, and final is balance sheet. Now we are going to see about this receipts and payment account. This receipts and payment account is prepared just like a cash book. It is a summary of all the cash transactions for a particular period. It is prepared at the end of the year and it is more or less like a real account. It records all the receipts and payments, even capital and revenue. It starts with opening balance of cash and bank. If credit side is greater than debit side, then the difference is overdraft. Next, we are going to see about the income and expenditure account. It is just like profit and loss account. It records only the revenue items. It follows the rule of debit all expenses and losses and credit all incomes and gains. If the debit side is greater than the credit side, it is called as deficit, and if the credit side is greater than the debit side, it is called surplus. Next, the final one is balance sheet. It shows the financial position. The surplus of asset over liabilities is called capital fund. It is required to create an opening balance sheet to know the capital fund if it is not given. Closing balance sheet is also prepared at the end of the year. Next thing, we are going to see some of the items which are peculiar to the non-trading concern. In that, first one is donation. Donation is nothing but the amount which is received from any source by way of gift. Next important item is legacy. This is nothing but the amount or the property received as a will from of a deceased person. Third is life membership fees. The members are required to make the payment in a lump sum only once, which enables the members for whole life. Next is entrance fees. The fees which is collected from the new member at the time of their admission. Grants. Financial assistance received from publics, government, other governmental organizations and other countries. Next is honorarium. It is nothing but the remuneration which is paid to the specific service providers like specific services like guest lectures, special trainers, stage performance and concerts, etc. Next is endowment fund. Fund which arises from gift and it is relatively large amount. And the last one is special fund. Fund like prize distribution fund, tournament fund and development fund. Next, we are going to see the steps in preparing receipts and payment account. First thing we need to remember is it starts with the opening balance of cash and bank, and it ends with the closing balance of cash in hand and cash in bank. It does not include non-cash items, example, depreciation. Next, we are going to see the steps in preparing income and expenditure account. It records the income, expenses, and losses which are related to the current accounting year. It records all the expenses and losses in the debit side and all the incomes and gains in the credit side. Both cash and non-cash items such as depreciation are taken into account. After preparing this, we'll prepare the balance sheet. And in this video, we have learned about what is non-trading concern and what are the items which are peculiar in the non-trading concerns and what is the account they are going to prepare in the non-trading